Hello, I want to welcome you guys to 2025 as we are in the beginning of the new year. It is extremely hard to believe that we wrapped up 2024, and for me, it was a whirlwind of a year. A lot of ups and honestly a lot of downs, and I'm sure that we are approaching this year with a lot of goals and things in mind. So I want to start off with a question that I get asked quite frequently, especially on the investing side. So this particular podcast would be more specific to investing. My outlook for 2025 is actually pretty optimistic. I do think 2025 is going to be shaping into one of the better years of investing since the last decade, maybe even longer. Now, I know what some of you guys are probably thinking. You're probably thinking like, John, people have been saying that every year. It's funny because I do hear like a lot of real estate agents will say every year is a good year to buy or sell. Right now, there's a lot of noise, right? And it's easy to get stuck waiting for the quote unquote perfect time. But the truth is, waiting rarely pays off, right? The best investors prepare for opportunity and take action when others hesitate. And that's regardless of when that timeline is. So today, we're going to break it all down and, the economic trends shaping in 2025. There's a couple of things that I want to talk about here. And one, it's how to get your personal finances in order to seize opportunities and the strategies you can use to maximize returns in this coming year. So the first part that I want to talk about is the economic landscape for 2025. So let's address the elephant in the room. So is the housing market going to crash? I've heard this question more often than I can count. And look, I get it. The crash of 2008 left a deep scar on real estate. I mean, I wasn't working at this time. I'm a millennial. I started working in 2011. And even when I was working, like, I've heard about it. And I know that this affected so many people in the world that it still haunts people to this day, right? And even though the conditions I can tell you right now, these conditions don't exist anymore. And even at that, it still presents some level of fear. So here's a fun fact, right? Since 1940, okay, guys, since 1940, the U.S. real estate has increased in value every single year except for 7. Okay, I'm going to say that one more time. So since 1940, the U.S. real estate has increased in value every year except for 7. So that's out of over 80 years. The majority of those 7 were during the 2008 to 2012 crash, right? So I was around from 2011. So that was like when job market was terrible, unemployment was high. So statistically speaking, the odds of another crash are incredibly low. So why? Well, you have to consider that lending practices have tightened since 2008. And when you could get a mortgage with little to no proof of income at that time, those days are unfortunately, or fortunately in some ways, people want to say, they're all gone, right? Those days are gone. So today, lenders are much stricter, they're tighter, and borrowers are better qualified. Now, here's what makes 2025 pretty interesting, okay? Interest rates are dropping. I know, John, you're saying, damn, interest rates are high right now, but with inflation, which was at 9% in 2022, they've gone down significantly to 2.7%. So we went from 9% to now 2.7%. So as inflation cools, the Federal Reserve has started lowering interest rates. Lower rates mean cheaper borrowing, and that's going to drive more activity in the housing market. The other thing that I want to add is COVID is what really struck a big effect in the rates, right? If we want those 2 or 3% rates, we have to be in a it's called a pandemic for a reason, guys. I think we don't want that to happen to our world or to society. Bad things have to happen in order for us to get rates like that. So keep that in mind. The other thing is, over the next decade, we're going to see a massive transfer of wealth as baby boomers are starting to sell their homes. So millions of properties will start hitting the market and creating opportunities for investors to step in. So even on the perspective of you not being an investor, you just wanting to buy a house, just consider that baby boomers are starting to want to sell homes, and 2025 is going to be an opportunity to do that. Now, home prices are starting to stabilize. In 2024, we saw one of the slowest housing markets in decades. Home prices have softened and properties are sitting on the market longer. And this is a golden opportunity for buyers to negotiate on better deals. So the other part that I want to keep you guys informed about is your personal finances. Just make sure that you're ready to buy when you're ready to go. All right. And what I mean by that is, let's talk about something that's not as glamorous, but just as important, right? And that's your personal finances. So let me be clear. Real estate is not a game for people who are financially unprepared. If you're living, okay, I know that there are a lot of gurus out there that are going to try to prove me wrong, but if you're living paycheck to paycheck or drowning in debt, it's time to address that before jumping into investing. So here's what you ultimately need. What you need to do, you need to set a budget. Think of your personal finances honestly, think of it like running a business. Would a company like Apple or Tesla operate without a budget? Well, I don't think they would, right? Yet many of us manage our personal lives without one. So sit down, list your income and expenses, and find out areas where ultimately you're gonna probably have to cut back. The other is you wanna consider paying off consumer debt. So high interest debt is honestly like quicksand, right? It keeps you down. It keeps you pulling you down, right? It's one of those things. It's a snowball type of effect if you end up getting into consumer debt. So focus on eliminating credit card debt, personal loans, or other liabilities that don't contribute to your financial growth. The other thing that I would suggest is to build some kind of emergency fund. So I know that there are big financial gurus like Dave Ramsey, right, and some Susie Orman, right. I think the common fund is for you to aim around between 3 to 6 months of living expenses in savings. This gives you the peace of mind to invest without worrying about unexpected emergencies. So when you have all of that, you want to start a real estate fund. So you want to open a separate account specifically for investing. And this is where you'll start stashing any extra cash that you have. And you want to think of this as a war chest you want to think of it as a war chest for when the right deal comes along. And you also want to be ready and prepared to deploy at any time that you find a good deal, which I will explain later in a second. So the strategies that you want to have, that you want to implement in 2025, right? Here's some good stuff that I want to share with you. All right. And here are the strategies. So I'm a big fan of value investing, right? I started off with value investing. I think all of us kind of have an idea of what I mean by that, but it's a simple, scalable, and proven way of investing. The goal is to find properties that are undervalued, improve them, and either hold them as rentals or then sell them later for profit. So here's how to execute this strategy for 2025. So you want to focus on B to C class neighborhoods. These are working class areas where homes are a bit more affordable and the demand is steady. A class neighborhoods might be too pricey, while D class areas often come with higher levels of risks. Now, you want to keep that in mind as you are investing, because A-class neighborhoods tend to have higher levels of appreciation, which I can explain in another segment. And then D-class areas have pretty decent value, but the risks, obviously, you want to outweigh that with the risk. The risk you want to outweigh with the potential opportunity. Sorry. So look for distressed properties. Ultimately, you want to ultimately look for distressed properties. These could be fixer-uppers, homes with cosmetic issues, or properties owned by motivated sellers. So the key is finding something you can buy at a discount. So you want to run the numbers, right? Typically, we investors like to use what we call the 70% rule, okay? You take the after repair value, okay? You multiply it by 70% and you subtract your rehab costs. So that is what we call your maximum offer. So I will give you guys an example, all right? Just make sure you guys pay attention. I will give you a second to grab a piece of paper or pencil if you have to, or grab a calculator, all right? All right, now that you have some time, okay, for example, if a home's after repair value is $200,000, you multiply it by 70%, which is $140,000, okay? So $200,000 times 0.7 is $140,000. And let's just say you just subtract the rehab cost, which is $30,000. Your max offer will be $110,000. So that is how you calculate your max offers when you're looking for deals, and that is the 70% deal. If you need to rewatch that segment, that is probably the most important segment for you to calculate what we call a good deal. Now, consistency is key. Analyze at least one deal a day and make at least one offer a week. This is discipline, and it will keep you in the game and also keep you informed on what the values of homes are, and also the higher probability of you getting offers accepted. The other thing to consider is creative financing. So what if you don't have the cash to buy, okay? I know we briefly talked about having the means to buy, but what I mean by that is there are creative ways to still finance deals, right? One of the ways is through private money. All right. You want to consider potentially borrowing from friends, family, or other investors, and they earn a return and you get the funds you need in order to purchase and do the rehab. The other option is hard money loans. These are lenders that focus on the deal's potential, and they focus on the deal's potential and not on your personal finances. And guess what they typically follow? They follow the same typically they follow the same 70%, 75% guidelines that you're following. So it actually allows you to bring less money to the table when you're looking for these deals. The other is you want to bring partners into the deals who can provide the funds while you handle the work, and you are able to split 50-50 or whatever percentages that you guys think is fair. Now, some closing thoughts here, guys. 2025 is shaping up to be an incredible year for real estate, okay? The combination of lower interest rates, increased market activity, and the transfer of wealth from baby boomers creates almost a perfect storm of opportunity for us to jump in, all right? But here's the thing. None of this matters if you don't act, right? So, we can talk about interest rates. We can talk about, prices going up, down, sideways. But honestly, take the time now to get your finances in order, educate yourself, and start building relationships with lenders, agents, and other investors. So I want to thank you guys for taking the time, for tuning in for today's episode. If you found that this was helpful, share it with someone who's interested in real estate and also investing. And Don't forget to subscribe. Also, add me on Instagram. It's johnlee_real estate. Until the next time, stay focused, stay disciplined, and let's make 2025 the year you change your life through real estate.
John Lee Real Estate, find you the best rate. All throughout Philly like Schuylkill Expressway. Talking to people who out of the 215, even the 267, who always helping like, oh, no time for no student.